Soybean oil and cotton making moves on Tuesday, while other commodities were mixed. Michelle Rook breaks it down in this morning's Markets Now.
Tuesday's market closes were mostly lower in the grains, but we were mixed in the livestock futures. Mark Schultz, Northstar Commodity, joins us, and a lot of back and forth action in the grains to end mostly lower, but a lot of it looked like some squaring up ahead of the USDA reports today.
Yeah, I do think it's just squaring up, getting ahead of the report. The funds have put on quite a bit of long positions here in the last couple of weeks in anticipation that maybe we have some crop problems developing down in Argentina. So we had a sell-off. We brought the beans back again, put a little bit more premium back in, weather premium back into the market. Numbers tomorrow, I think it's just going to be important. I think you've got to, I don't expect it to be much that's going to change the market. I just think you got to avoid a couple of things. One is if you want something on the friendly side, I think an Argentine bean crop has to come to 40 million metric tons or lower. And on the corn, I think you want to stay away from a corn carryout in this country that hits 1.3 billion bushels or more.
Yeah, and South American numbers, like you say, are going to be pretty important. But let's talk about soybeans on Tuesday. Pullback, but meal was the big pullback. And was that just some meal oil spread unwinding?
Yeah, I think you've had a combination. That the meals, of course, has had a pretty good move to the upside. We're at contract highs. You're starting to get into the South American harvest, so you start putting some beans into the world market, and you'll do that on the crush. Argentine crush is very slow right now, not going to pick up that I see anytime soon. But the oil, today you had the bounce back. You had the combination of the energy prices surging here today in this country. That was good to see. You also had Indonesia, I believe, reduce the palm oil usage for fuel in their country, and that put a spark in the palm oil market here for the last couple of days. And that's one of the reasons why all of a sudden you caught bean oil on a pretty good setback, and you're seeing an unwinding of that spread back, buying the oil, selling the meal.
And then cattle setting back here, but after a new contract high, some profit taking certainly was to be expected, I would think.
Yeah, I think obviously you got to have some type of a pullback in here. I mean, we got June cattle futures came within now $1.20, $1.30 of all-time record highs. So
Right.
You were probably destined to get something that pulls back. But if you really look at the overall fundamentals, this market still looks awfully, awfully good, and it's still very orderly. I mean, if you're up at these prices and worried about prices that were peaking out, I don't think you're going to peak out the cattle market by being 50 cents higher and then close 50 lower. I don't think that's going to be the case. I think you're going to eventually get to something where it's almost a limit move or get into limit moves before we find some type of a top.
Sounds good. Mark Schultz, Northstar Commodity. More Ag Day coming up.